Good evening all, hope you're doing well. What we've seen today, we've seen quite a lot of indecision and the fact that has been quite a low volatility, 72 hours, and it looks like the market's probably looking ahead to the CPI next week, which is, some time away still. We have some jobs data tomorrow. I think it's jobs data, and we've got the BOE as well. It's worth noting the dollar bubble now because that should indicate a strong USD, and we should be seeing a weak yen. However, we have seen a little bit of dollar strength, but it looks like it's trying to be sedated a little bit. And if we come to the risk calc, we see VIX. It's not allowed to go into positive territory. Okay, so it's been under a lot of pressure. The thing is, if that goes into positive territory, it's going to push the indices down. And I guess they're probably trying to avoid that. The issue is if we go risk off, that's going to mirror the bubble location really well, because we've got a strong dollar that acts as a safe haven, and the big fish will flock into US Treasuries if things go a little bit risk off, and the dollar can appreciate from that. Okay, so it looks like that's been sedated a little bit, and it looks like the VIX is being sedated as well. So you can't really blame them, when I say them, like the big banks, because they don't really want a risk-off scenario. They want things to continue to pump because it's not in their interest to have like a down day. They want to make money. They're long, and they just want to profit. Okay, and the reason for them being long is that they held a really, really short, as we can see on the risk calc, and they really added on the 24 hours. So we were 23, minus 23, and we're now minus 26. There's 26 pairs versus the one bull. Okay, so allow that to sort of materialize into your mind. There's one guy or girl long, there's 26 people fading, reversing that one person. 26 versus 1. Okay, so it's getting crazy again, and we could be seeing some flip-flop because of the skew, because when we got really extreme, it was really uncertain, and it was quite horrible to trade. Now the last 72 hours has been quite tricky due to the low volumes, and also the fact that the skew isn't helping as well, and the big fish are trying to suppress the VIX and the dollar. For obvious reasons, they don't want things to fall. Now, aiding the dollar is the fact that they've gone long AU, EU, GU, NU. Okay, they've shorted UJ a lot, and they've shorted dollar Swiss, but not only a tiny amount. It's not really worth mentioning that. But those big shifts are indicative of them to fall, because if the herd go long, who's going to take the other side of that trade? And we know historically what happens when the herd goes strongly one way, they'll get punished. So this is indicating that we should be going a little bit risk off, and so we should have a low score. We do, but that VIX is just being under pressure for lots of reasons, and it's a little bit frustrating, because it would be lovely to have a big up move and then a nice down move, a nice up move, but currently we're just seeing up, 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 not allowing things to retrace. So it's very, very difficult and slightly annoying, to be fair. So that's just a little bit what's going on there. Things are getting sort of manipulated in order to resume like stability. And with a really strong VIX, it will cause a lot of chaos, as would a strong USD. But it's looking likely we should have a strong dollar. Okay, so that's that. Let's come to Discord. Now, we were euphoria when I did the update half an hour ago. Okay, so we were euphoric. Technicals were 55, and now we're cautioned. The technicals dumped. Okay, so we are flipping between euphoria to caution. Okay, so the one beyond caution is fear. So I don't think we're going to go to fear. In fact, I don't think we will, because we've got greens on the sentiment. So we'll be within caution and euphoria. Okay, and so there's the movement. EG, DAX has really shifted. It's quite exasperating, really, because it'd be lovely to get a good entry on some of these indices, but they're not offering good buy the dip opportunities because they heard us. They're just not willing to. They'll just add to the short. People, the indices were full, but they're so quick to get in and short, and by doing that, it pushes the price higher. So we need these retail guys out the equation. I think we've got too many. And when they come in, it does cause a lot of sort of side effects for the direction, and it's quite frustrating. Dollar Swiss is a red, and oil has now flipped a little bit to green on the 24-hour change. Okay, so indices are quite green, as you can see. All right, and so just to say, we've come from euphoria to caution. We could well go back to euphoria and then back to caution. So it's going to be probably a little bit annoying to trade over Asia. Tomorrow we'll have a better idea because we'll have some data out. Jobs data. And we obviously got the BOE as well. I would recommend probably avoiding the pound going into that event because we've had some mixed messages from the BOE and it's caused it to be very whipsaw. So you might want to wait until afterwards, and then you can see how the banks, etc., how they interpret the press conference. Now Bailey is normally fairly dovish, but he may have like a hawkish tilt, So we'll have to wait and see. But I'll probably trade after the event, in my experience. Okay, so that's that. And we can look at the indices now. So I think it's going to just be a little bit choppy, and we may just be a bit choppy over Asia until we get some stuff going out by New York. By that time, we've got 17 hours of just chop potentially. All right. So let's come back here. S&P. In fact, we won't go there. We'll go back to Discord because it's all nicely organised. Instead of me having to click through menus. So DAX, and this is because they sold it once, twice, thrice, and then the fourth time. Each time they sell it, it punishes them, and that's that. So there's 11% along now. All right, so the thing is, we can't get to 0% long. It wouldn't be a market. It just wouldn't happen. So it's not a very good glimmer of hope if you are bearish on this because it could take a while for these guys to get squished, but we won't ever get to 0%. It just would never happen, and that could be like the light at the end of the tunnel. But if you are short this, you've got to be so careful. Just look at the momentum on it, and you can see, we made these higher lows and higher highs. Up they go, up we go. That was a little bit naughty here, but then you could probably argue it was a trap because they were quick to sell. See these two candles? They sold. They get punished. And so that's that. So it's just really horrible, isn't it? So maybe if you're bearish, you might be okay, but I would be so careful. You want to be fighting. You don't want to be fighting that trend, and you want to be with the big fish. And this is why if it got green down here, it's a buy. Okay, so you're just looking for buys. You're looking for dips. Okay, US 30. Yeah, and this is yesterday, so we're just sideways. It was just like, I can't really comment on the direction. I mean, you could probably anticipate it is going to go higher, and we did because they'd sold, and so we pumped. Right, so that's that. US 500. Now, this is the thing of note, is that this here is telling us two things. It could be them going long or less short. So I think it's less short because I don't know who would be buying up here. But I did see something on Twitter, and I don't know if you know a guy called David Bell. He was saying to go long on the S&P. He's got a lot of followers. I'm not saying he alone, caused this move, this shift, but a lot of people are on Twitter and saying maybe it isn't a bad idea to buy. maybe, maybe there are retail people buying up here, which I would think would be quite strange, but it can happen, and there's quite a lot of influencers on Twitter. So if someone fairly popular with like thousands and thousands of followers, they then have their followers, and then they would have their followers. So it could be, it might be a couple of notable people on social media say, it's probably not a bad idea to try along. So if so, it might not be less short, it could be more long. But either way, that or not, is that we have had the crossover, and so by doing so we fell these three candles. So it will depend on the conviction on their positions. If they do try and aggressively buy, they'll get punished. Okay, so that's that. And then oil, and this is them giving up. They finally had to capitulate, and we just kept breaking the lows. See, those lows got broken, got taken out again twice, and then the third time was too much, and then they sold. Well, they'd got out, and so likewise that could tell us that they're shorting, but it's really they were short, but now they're less short. Right, so no, they were long, but less long. Okay, so this is them trying to buy here, and they held on for a long time, and they encountered a lot of pain on that move. So that's them going short or less long. Okay, and then gold, and this will be the last one. So we could be making inverted head and shoulders, but the thing is, like I said at the top of this video, is that we've had like a low volatility, low trading volumes, and we can see like when we see a sudden sentiment shift, it will change your price action quite erratically. And so they've gone long, fell, then they shorted, so it rose, and it all happened very suddenly in the space of 5, 6, 7, yeah, so 8 hours. We just had a bi-directional chop in 8 hours, so it's very, very hard to trade. I don't know how you would have traded that. You might have been okay. Yeah, you might have just been lucky. I think it's quite untradeable. I think there's the channel break. We fell quite heavily, and that's it. So fairly busy day tomorrow. We're likely going to fluctuate on risk calc, but at least you probably know the reason for it is that we should probably be risk off if we look at the dollar, and but they're trying to suppress the VIX, and they're trying to sedate the dollar, which will mean that the retail guys might get paid on their dollar exposure. Okay, because the big money are probably going to sedate the USD if it gets too powerful, and so therefore it might be a bit of a payday for the herd, and we can see whether or not it's going to be a payday for them by checking your my FX book failure rate, and we've got a high failure rate, so it tells us that they're getting punished. Okay, so if we have a bit of mixture there, then they're going to start getting paid on the dollar, so that's okay, right? So dollar CAD is the one, it's the odd one out, so currently that's okay. So they'd gone long yen, they got punished, they shorted the dollar, and they got punished. And they went long Aussie, and they got punished. They shorted AJ, they got punished. And it's just whatever they do, they'll get punished. 84 is a very good score. That's quite respectable, I think. And so that's how you know whether or not they're going to get paid or not. Okay, so and if they're going to get paid, then that will be unusual, and so we might see a reversal as well, because normally whatever happens to the retail guys, if they do one thing, they'll get punished, but if they start getting rewarded, then we'll have to see some kind of reversal. So it's good to have to check, and any questions, let me know. If you want to join, we've got the Patreon details on this video. I'll speak to you soon. First disclaimer, for anything that you do in the financial world, is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling. Okay, and we really want to be looking at trading, and we want to be looking at risk to rewards, and in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital. Okay, so you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.